Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle review for Monday the 22nd of the 3rd to Friday the 26th of the 3rd, 2021. Basically, it's our version of the economic calendar. We've modelled Tier 1 and Tier 2 data and we're going to run you through the various complexes. So let's make a start. We're going to start these as we write them up to save time. Anyway, we've written up China and the dollar USD. So let's start with China then. We've got Tier 1, T1, Tier 2, Tier 2, T2, Jan, Feb, March for the months, and the month of March has just been completed in our terms. So we've got 3 months of data, and these are discrete data, independent of each other. Right, so start with China then. January, Tier 1 -5, Feb -5, March +4. So we've got a weak soft Jan Feb and a marked improvement in March. Tier 2 +10, -4, +11. So we've got like a roller coaster here. Fairly strong Jan, deterioration in Feb, and now we've got a good strong showing in March. Right, so we'll tidy all this up at the end, but anyway, we'll get through them. The dollar then. So Tier 1 -5, +1, -6. So we've got basically a deterioration in the last month. Tier 1 +24, +36, -8. So we've had very strong data Jan Feb, and we've now got a deterioration in the Tier 2 as well. So we're going to stop it there, so don't go away. We'll write the next two up. Right, welcome back. We've written up Germany and the EUR, the 27 nations as a block. Right, Germany then. T1 +4, +7, +2. So we've got fairly strong Tier 1 data, and it's marginally positive. Tier 2 then, +7, +11, +11. So pretty strong incremental increases in German data. Euro as a block. Tier 1 -6, +13, -2. So we've got deterioration from February really in the Tier 1, but we've got an improvement +5, +6, +14 in the Tier 2. So we'll leave it there and we'll write up the next two. Right, we're back. We've got the yen, JPY, the pound, GBP. Yen then 0, 0, -2. So we've got neutral, and now we've got a slight deterioration in Tier 1. +17, pretty strong. +5, -6. So we've got a deterioration in Tier 2 yen data as well. Pound then +3, +8, 0, Tier 1. So we've had an improvement, and we're now neutral to flat on Tier 1. Tier 2 +5, +8, +11, -8. So we've got a deteriorating situation in the Tier 2 on the pound. Right, stop it there, put the next two on. Right, we're back. We've got the CAD, AUD, and the AUD, the Canadian dollar, Australian dollar. CAD then. Tier 1 +8, -4, +6. So we've got a deterioration running into February, and now we're improving into March. Tier 2 -1, +7, +5. So the improvement is holding more or less steady in the Tier 2. AUD then. Tier 1 +2, +2, +6. Marked improvement for the Tier 1 in March. Tier 2 +6, +8, +15. We're gaining momentum in the Tier 2 as well for the AUD. Right, stop it there, last two coming up, and then we'll do some analysis. Right, we're back again, last two. New Zealand dollar, NZD, Swiss franc, CHF. Right, New Zealand dollar then. Tier 1 +2, +2, -4. So we've got a deterioration in the Tier 1 in March. -2, -7, +2. And we've got a slight improvement in the Tier 2 in March. Swiss franc then 0 plus 2 0, pretty neutral tier 1, minus 2 plus 11, good strong February for the Swiss franc, minus 1 in March, so deterioration in the data for the Swiss franc tier 2 wise. Right, stop it there and then we'll do the analysis. Right, welcome back then. Right, so we've done the basic work on the data cycle there. Let's do the analysis now then. So if you remember, the weekly flows were basically, they look like yen, euro, pound, dollar. The dollar was the positive driver, negative mover, negative secondary driver. The dollar was the positive driver at plus 232, plus 41 on the pound, minus 79 on the euro, and minus 194 on the yen, plus or minus 273 activity. Now this ties in with our sister video, which is the flow cycles for Monday the 22nd to Friday the 26th, which is the same period. But if you look here, you can see that over that period which we're talking about now, the dollar was the opposed positive driver at plus 232. So we've got front and back door flows. So we've got dollar strength, and the opposing negative flows were mainly coming out of the yen at minus 194. The euro was a bit soft at minus 79, and the pound was marginally strong at the rock at plus 41, and that was an activity of plus or minus 273. Right, so that puts it into perspective of what's been going on. Right, so right, let's just talk about the actual flow. So China is most definitely, in terms of the data cycle, is on the up. The dollar is most definitely on the down. The German data is most definitely on the up, not as high as China, and the euro, whilst it's weak on the tier 1, it's pretty strong on the tier 2. So that's the situation there for the euro complex. The yen is deteriorating here. The pound is neutral to deteriorating really. So the CAD is improving. The AUD is definitely improving. Very strong tier 2 and solid tier 1. The NZD then is neutral to negative. The tier 2's hanging in there, but the tier 1's starting to look quite weak, and the Swiss franc is pretty neutral. So, right, how does this tie in with what we're looking at then? So basically, we're now going to be moving into the second quarter. We've got a situation where equities haven't really fully recovered. They've had a knock. They got bounced, but they're in this sort of transition period. So we've got China ramping up. We've got China has a greater than equal to 6% GDP target. We've got the 100-year anniversary in July, which means that the next quarter, April to June, will be obviously have a bearing on how much they're going to celebrate. So July, this is the People's Republic of China anniversary. We've got the Fed telling us that they're not going to touch rates till 2024. So that's one thing. We've got the ECB saying they're going to be supportive. And they're operating open market operations to try and keep the yields down. we've got weakness in the yen, so we've got the equity transmission. So we've got the equity transmission. We've got weakness in the yen, and the yen is likely to. There's no reason to pump up the yen at all. We've got the pound neutral to a little bit soft now, and we've got the commodity currencies, particularly the CAD and the AUD on the up, and we've got oil. We've got oil strong. We've got an OPEC meeting next week, and we've got a ship stuck in the Suez Canal, potentially a supply bottleneck. Now the New Zealand, which is the New Zealand dollar, which is the other commodity currency, we've got neutral to negative data cycle. We've also got the fact that they're operating at 67% in terms of the modelled complex. Only the Swiss franc is above them at 70%. So the elbow room for the New Zealand dollar to go up is very relatively low. And if you look at the FX pairs that are going to benefit from that, it's going to be the euro, the pound, the CAD, and the AUD. They're the ones that have got the most elbow room to come up. And obviously the AUD versus the dollar as well. Is what we're up to. So we're basically, we're long AUD dollar, we're short the New Zealand dollar against the euro, the pound, the CAD, and the AUD, and the whole macro scenario. If you're going to get a weaker dollar, then you're going to get commodities like in that. So commodities are likely to come up. Copper. We're already seeing US steel come back. So the likelihood is you're going to be in a soft dollar environment, which will benefit commodities. You're going to get you've got the stimulus checks pumping into most economies, particularly the US, which will basically is an injection into the circular flow of income, and via the Keynesian multiplier system you're going to get a ramp up in GDP. So you're going to get potentially strong consumer demand running through the system as well. It's all looking very bullish for equities, commodity currencies, and the China story obviously is the kicker. So that's our view of the macroeconomic environment going forward. This is what we feel is going to happen in the next quarter, which is basically what April to June. We think we're going to have a very strong second quarter globally, and we're positioned to take advantage of that. So hope that was useful. Try and catch the sister video, which is the flow cycle for the same period. If not, I'll see you Monday for the daily briefing. Thank you very much.